Welcome back. In our top business story, the UAE economy is set to grow by 3.7% this year, according to Saudi Arabia's National Commercial Bank. A new report released by Saudi's largest bank accounts this growth to strong oil prices and increased government spending due to the ongoing recovery. It also read that the GCC's GDP will grow by 6% this year and 5% in 2012, also led by higher oil prices, with Qatar and Saudi Arabia leading the growth. However, they also stated that there may be various challenges to the strong growth, as the region's markets are at risk to be affected by the debt issues in the US and Europe. In terms of oil prices, the study forecasts the price for Saudi Arab light crude to average around $95 a barrel this year. DP World is the third largest private seaport investor globally. That's according to UK-based international port law firm Holman Fenwick Willen. A report released by the company revealed that DP World invested nearly $1.9 billion into port management projects between 2006 and 2009. Recent investments include stakes in two port companies in South American country Suriname, which it is looking to finalize in the third quarter. Holman Fenwick Willen added that the ports company handled nearly 50 million 20-foot container units from America to Asia last year, and capacity is expected to reach 90 million by 2020. Imports of copper, aluminum and electrical appliances pave the way for the UAE to become a self-sufficient producer of locally manufactured goods. That's according to a new report by the Dubai Exports Authority. The report showed that imports of those goods rose more than 25% between 2005 and 2009 and accounted for more than 360 million dirhams per year. It added that more foreign investment is needed within the manufacturing sector, as only 16% of all investments were made by foreign companies last year. The manufacturing sector accounted for 13% of the UAE's GDP in 2010. Noor Islamic Bank is the latest company to release its second quarter results. It posted an 85 million dirham net profit for the first half of the year, and revenues rose to 386 million dirhams. So let's now take a look at the local and regional stock markets. The UAE stock markets ended down today. And in our world business news, the US debt crisis is becoming more threatening by the day. Over the weekend, the debt reduction talks between Republicans and Democrats collapsed. Congress will try to hammer out a deficit deal today to avert a catastrophic default and to protect its AAA credit rating. If not, the Asian markets, which open late on Sunday, Washington time, could be in for a tumultuous session if a plan isn't negotiated by today. A Republican leadership aide said lawmakers are working on a plan for $3 to $4 trillion in savings over the next 10 years, but another official said there was no agreement on numbers yet. It is unclear whether Republicans would include any tax revenues on the rich to reduce the deficit, as U.S. President Barack Obama demands. He warned lawmakers not to pursue a short-term extension of the $14.3 trillion US debt limit. Rating agency Fitch put Greece in temporary default as the country received a second bailout package last week. Fitch considers the nature of private sector involvement to constitute a restricted default event, the head of sovereign ratings David Riley told Reuters. However, Fitch sees Athens now having a better chance to tackle its debt mountain, which is as large as 160% of the country's annual GDP. Greece will receive an extra 109 billion euros of government money, plus a contribution by private sector bondholders estimated to total as much as 50 billion euros by mid-2014. Those banks and insurance companies will voluntarily swap their Greek bonds for longer maturities at lower rates. Indian officials recommended allowing foreign companies to own up to 51% in multi-brand retail stores, according to Bloomberg, which quoted a finance ministry official. A government panel has proposed a minimum investment amount of $100 million for companies such as Carrefour or Walmart to be able to access India's retail market. The country is the world's second most populous nation and therefore promises to become a huge source of income for those international retailers. Research company Business Monitor International sees retail sales in India to double to $785 billion in the next 4 years. Final details of the proposal are said to be currently worked out, according to the official. Before we go, here's a quick overview of the oil and currency markets, and after that we have the day's sports news for you.